we're doing here is a panel which is discussing the collaboration between InsurTech, HealthTech, FinTech, and the larger e-commerce ecosystems and deepening innovation. So we have with us Mr. Apaar Kasliwal, who's the COO of PolicyBoss. He's going to be moderating the session. Apaar, if I could invite you on stage. Mr. Ashish Desai from ONDC. Mr. Saurabh Mehta from InsureMO. Mr. Manish Mishra from Pazcare. And Mr. Adarsh Chokhani from Assurekit. Thank you so much. And Apaar, you will do the honors of introducing the panel that you have. Thank you.
Thanks, Nilanjan. And thanks, IIA, for organizing this event and, of course, organizing this specific panel. I met a lot of good people and new people which I've never met earlier. So it was a great opportunity for me as well to get to know other businesses. This is a very, I'm sure you all had fun or during the day hearing other speakers and other panelists around the different aspects of insurance. This is yet another interesting topic, I think, and sort of topic which is going beyond insurance, figuring out a way how insurance can be really collaborate with health tech, fintech, or commerce ecosystems to really embed the insurance within our daily lives. And to kind of start this panel and introduce, I would really like to first introduce Mr. Ashish Desai. He comes from ONDC. Ashish has over 25 years of experience in financial services and digital public good infrastructure. Prior to ONDC, he was Director Monitoring and Evaluation at Niti Aayog. His corporate experience spans across Aditya Birla Capital, First Rand Bank, and Motorola. Currently, he's the Advisor Strategic Initiatives for ONDC, also a senior visiting fellow at NCAER, and a visiting professor at IIT Bombay, teaching data for development. Welcome, Ashish. We have Saurabh Mehta. He's the global head of Affinity at InsureMO. Saurabh he comes with 17 years of experience in GTM, sales and partnerships. For the last decade, Saurabh has been instrumental in scaling early stage startups and high growth companies across fintech, payments, and InsurTech space. He loves to work at the intersection of data and technology to drive business growth. He's also an active investor in Indian ecosystem. Perfectly the right guy for the panel, I guess. We have Mr. Manish Mishra. He's the co-founder and CTO for Pazcare. Pazcare is an employee benefits platform for insurance with insurance, health, and financial benefits. He comes with 15 years of rich technology experience in SaaS, FinTech, and InsurTech domains. His previous stints have been with Amazon, Disney, and Mindtickle. And we have Adarsh Chokhani from Assurekit. He's the co-founder of Assurekit with a vision to make insurance 10x simpler through a full stack distribution and servicing platform ecosystem. Before this, he launched a tech-driven logistics firm and honed his skills at industry leaders like JLT and ACO. So we have a very eminent and sort of diverse panel for this particular topic. I feel this particular panel will go beyond insurance, will try and explore an intersection between InsurTech and the dynamic worlds of health tech, fintech, and commerce. Today, we'll explore how these ecosystems are coming together to create a symphony of innovation that promises the change we are looking for in insurance. I think first up to this panel, I would just like to ask a question around your views on this particular topic. And it's a very, very broad topic. So maybe from your point of view, your business point of view, understand how InsurTech is collaborating with health tech, fintech, and commerce worlds. Maybe Saurabh or Manish, whoever wants to start.
I can go first. So see, first of all, I think overall, fintech and InsurTech, health tech, we are seeing a lot of traction across these different companies and different verticals. A lot of cross-selling is obviously happening. You have got consumer base within these companies where you want to leverage that customer base and you want to provide very contextual good products to these customers, right? So that you can actually have them and retain them and for longer LTV. So that's definitely happening. But I think more than that, we are also seeing collaboration, not just health tech and fintech companies selling insurance, but we are also seeing the reverse happening. So from our point of view, there are multiple wellness products provided by several health tech companies, which are very, very innovative in nature. Those are getting embedded into into insurance products now. So the vice versa has also started happening, not just in India, but globally we are seeing that trend. So I think that would be sort of my 2 cents here.
Great. I think that's right up your alley, Manish, on the health tech, trying to sell insurance and the other way around.
Yeah, so in InsurTech and insurance, we have more understanding of how exactly the underwriting would take place. And it takes place based on certain amount of data, which is again available more on the FinTech and the health tech part. So like there are very beautiful combinations coming out. Like there are, we can see a couple of FinTech players. They are selling life insurance based on the financial data they already have about the people, like their spending nature, how much they are saving, how much they are spending. And similarly, like how it has happened on B2C side, there is a lot of scope on B2B as well. Like for an example, like a company doing e-invoicing and a company which is maintaining ledgers of goods. Now, when it comes to property claims, then a company has taken, let's say, 8 crore worth of property insurance. Then how exactly do we know that the property at the time of claim was actually 8 crores or was it 10 crores? So all these things can be bridged together with InsurTech getting integrated with FinTech, and a lot of different opportunities are available which are yet to be unlocked in this space. Just a small example, I think all other panelist members can add to it.
So for me, fundamentally, when we look at the intersection, right, it actually plays a very important sort of a play, because what insurance does in a lot of ways is that it adds trust to the ecosystem, right? It adds trust and downside protection. So when you talk about this embedded nature of 3 or 4 ecosystems cross colliding, so it already happens with e-commerce. You have payments, right, which adds the last mile completion of the product payment structure. Insurance adds the added trust element, right? The warranty, the guarantee, the returns. So as a consumer, when you buy, you have your upside protected through all the different channels that are there, but also your downside protected. So for me, embedded plays a very important role, both as what we're doing at Assurekit, which is adding more products in the market which add value to the customer, and also for me as a consumer. Because at the end of the day, we are also consumers of these very products, right? So I also own a phone and I have warranty on that phone. I also have a car which is insured, right? So it's just the cross collaboration to drive ultimate commerce growth. And that's effectively how I look at the overall narrative of the embedded in short.
Yeah, Ashish.
So what does actually insurance do? Insurance is a provision against an exogenous shock. Now, how would you determine a shock? Can you use the payments data, fintech data, e-commerce data, using some econometric analysis to do a prediction, probability of prediction, and probability of risk? Now, that's where the essence goes of collaboration. And I'll go back to commerce. And I'm just coming from representing ONDC. So from an ONDC perspective, which Open Network for Digital Commerce, let's check what is the objective of ONDC. ONDC is giving more markets to the seller, more choice to the buyers. Now you go and have commerce coming in, and I'll give an example what we were talking outside of a person buying Kanchivaram sari from a viewer in Madurai. Now when I select a sari, I select a 40,000 rupee sari, it has to be shipped to Srinagar. Now the Kanchivaram sari person who is the viewer needs to insure his 40,000 rupees worth of good. That's where an opportunity comes in to build a product based on not just product category, but also on pin codes, based on the history of the seller, the history and the badging and scoring that the seller has. So essentially every data point, if it can be used from the commerce or the payment ecosystem to underwrite or to determine the risk, an opportunity to create a new product, or price the risk better is there. And that depends upon the ability of the insurer to do it and the willingness.
Yeah, so commerce here is not only actually helping accessibility and convenience, but actually helping innovation of new products within the insurance sector. So this is awesome, and I'm sure, I mean, with the ONDC coming in full play, we'll get to use it more often within our insurance plays. So on that note, actually, Manish, I wanted to ask this question around Pazcare. You see a lot of, you're essentially at Pazcare, you're working with corporates, figuring out their employee benefit programs. And there are a lot of these attachments or embedded products around health tech or what the employers want to provide right now to employees that you must be seeing. So what are the new trends that the employee groups are asking for right now?
Yeah, so people are basically asking a lot of affinity products, right from, let's say, employer as of now wants to be enabler because they have limited budget. In that budget, they provide best whatever is best for the employee, and for rest of the benefits, they want to be enabler. So this is where they go beyond insurance and they look to provide wellness benefits, they look to provide financial benefits, and it's going one step deeper where they categorize people by their age group and they are trying to understand what their necessities would be depending upon their specific age, condition, and cities. So multiple factors matter, and based on that, they want to give a customized experience to their employees, which and ultimately at end of the day, they come back and ask to us that what is the engagement of these benefits that I have given to my employees, number one. And the second part is, how was the experience of the employees in overall consuming those benefits? So this is where, again, these things come into play, where getting all these benefits together onto one platform and making each one of them speak to itself, right? So for an example, a young person, they want more on the fitness side, fitness and tax consultation. So these are the kind of benefits that they would be interested in. Somebody who is a little bit higher up in the age, they would be looking for doctor consultation for their family. Somebody little bit more higher up in the age, they would want to take top up for their parents. So these are the different levels, and gradually somebody having a child, then they would want maternity and child care. Somebody would want better care for their parents. And ultimately, what we are seeing from the end user is that their demand for customization of all these benefits, seamless claim experience, and some data to back it up that people have used it. So these things are gradually coming up.
So are you actually seeing engagement levels going up with the employee set for other products beyond insurance?
Yeah, so this is where actually integrating FinTech product along with InsurTech and HealthTech product, we're able to see higher amount of engagement. Because when we were selling only insurance as a product, then engagement on the platform used to be very low because only hardly 8 to 10% of people use insurance, and that too once in a year. Whereas FinTech, it has a 97% retention rate on an average. This kind of gives a lot of benefit in terms of explaining all the benefits to the employees as well as making seamless usage.
Adarsh, you also end up working a lot while creating some sort of embedded programs for similar set of audience or otherwise for corporates in general. What has been your experience with regards to embedding products and actually the engagement levels going up and hence the product offtake actually going up?
Actually, a very interesting question, right? So first, I'll just top up to what Manish said. So because we are Pazcare customers ourselves, right? So essentially, we see what he's doing firsthand with, let's say, the health benefits coming in, the card stack coming in, and for us both as people who understand insurance at Assurekit, that with the added flexibility of, there are a lot of things that we want to build, but it's not our business model, right? But when we see companies like Pazcare and a lot of others doing that, we see the direct value addition of the product, right? So we've firsthand experienced that embedded structure as a customer. So it works very well. That's more of a customer testimonial, right? But to sort of top it up, when we look at embedded products, right, for us, embedded products are essentially products that make sense with the partner at the point of sale, right? So they should drive value to the customer. And there are two parts of the chain. How well can we underwrite the product, right? How well can we create that product construct? The flip to that, what we do at Assurekit is figure out what is the claims process, right? So what is the claims process even before we start making the product? Because ultimately the engagement is going to come at the time of claim. That's the ultimate source of verification, right? Whether the product works or not. So we look at all products from that lens. So just to give you an example, one of the categories that we're working on is income protection, right? Now income protection in a very simple terms is protecting your money. So protecting different scenarios that put money back in your pocket, right? So one such example that I'll take up is the daily wage, the gig income protection plan, right? So the way it works is at the end of the day, think of yourself as a Swiggy or an Uber driver. You have your parcel, you go and deliver, and that's your due course of business. But for whatever reason, your bike shuts down, it's not working, your accident, you effectively end up in an accident where, let's say you're not hospitalized, but the doctors advise you to stay at home. Or someone at home is unwell and you can't come to work. So these are all factors contributing to a loss of income. What we as a Assurekit want to do is we want to be there and put money in your pocket the very same day. Now this happens in collaboration with the platform. So you require the entire platform buy-in because at the end of the day, two people are missing out, right? So the end gig worker is missing out on his money. The platform's also missing out on revenue opportunity that he would essentially make on the worker. So fundamentally, there needs to be like a natural buy-in. We look at a claims first approach to solve for embedded, and ultimately what you want to build, or the end goal is to build both engagement with the customer, and with that engagement as a business, build lifetime value of the customer. So that you start with one product and then you drive more and more relevance as the customer, like Manish said, rightly grows through his life cycle, because his needs go on changing, they go on updating. You're not married, you'd end up having a family, you'd end up having a kids, you'd end up having a pet. And that's essentially what all marketplaces are also doing, right? They're trying to become super apps with sort of take care of everything. And as a Assurekit, we want to solve for that. So we want to solve for that missing piece where we give programs that make sense. At the same time, there's a hyper focus on claims as a structure, right? And we do this in collaboration with insurers. So at the end of the day, buy-in of everyone is important. But in our experience, embedded just does not mean micro products. It does not mean the 5-10 rupee products that are there. A lot of times, a lot of platforms that we work with don't want to monetize on the product, but want to add value through the product, right? And drive that engagement. So that's fundamentally what our first-hand experience with embedded has been.
Interesting. So claims is definitely at the center stage of what insurance promises, right? So it's a good claims first sort of an approach within the embedded category as well, which is very much required. Of course, Saurabh, I think similar question to you, what I just asked from Adarsh, but from a global perspective, because you see things around the world on how embedded insurances are featuring, and what kind of new products or anything new trends that you're seeing worldwide, which can be helpful here.
Yeah, no, definitely. I think I'll also relate back to the main topic, which is more fintech related stuff. So that's what we have started seeing globally. We are working with, with a lot of fintech companies globally, which sort of roll up into their wallets, or, their payment companies that all roll up into fintech in some way. They have started using insurance as a reward for customer acquisition as well. And I think that's what a lot of trend that we are seeing these days. So we work on some products called stackable insurance, which essentially means that the more, for example, you could have a wallet, and the more you top up, the higher your life insurance coverage, keeps getting. So it's in some way, so that is more to drive the growth of your core business. We have also started seeing trends where you are obviously, and I think it's not new, I think in India also is happening now, but can you drive good behavior using insurance, right? So if you are a driver in a gig economy situation, and you drive safely during the day, during the month, someone is monitoring that, and can your insurance for you and your family as a reward keeps going up, right? So that's being used as an incentive as well. Now we have started seeing that being adopted across industries, whether it is people using cyber product as a value add product for wallets, right? So that's also something that people have started adopting globally. Telcos are adopting that. So insurance as a reward, as a means to incentivize good behavior, drive the growth of the core product, is something which is coming up now.
I'll just like to add to the gig economy what was mentioned over here. So in ONDC, mobility is one of the fastest growing and largest area. And one of the loan products that, we launched financial services about 3 weeks back with credit specs being rolled out. Next week will be insurance specs being rolled out. But in the credit specs, one of the opportunities which the lenders came back and said that we want to give loan for the auto guy to take the auto rickshaw on rent for a day. And that's where an embedded insurance product opportunity comes in. Can you insure him for a day when you give him loan? Now, these kind of tactical but still strategic products needs to be designed. And that's where the channel, the underwriting data comes in. However, there is a one word of caution. The inability of the insurer to underwrite doesn't mean that you pass on the risk in premium, right? So essentially that we have seen in lending, the inability to do a risk assessment. Every risk is a good risk at the right price. So you use that logic and then just price it. And then you have your commissions on the bill on top of that. And essentially then we say that it is not democratized. So we got to just do a little bit of introspection on that theme.
Perfect. Well said. I think this will definitely help the long-awaited insurance penetration in the country. I think since we are on this topic, and before we jump on to hear a little bit more, Ashish, from you, I really want to ask one question I've been perplexed with for a long time. I really don't know what is the difference between affinity and embedded. It's very, very loosely coined terms. People use it interchangeably. So since you're the global head of Affinity for InsureMO, let me put you on the spot.
I should change my title after your question. So no, I do manage both actually, but yes, it is being used interchangeably a lot of times. In fact, in the definition of embedded and affinity sometimes differs country by country also. So in US, embedded, it's called, embedded has a slightly different definition versus what we have here. But theoretically, what the difference is, embedded insurance is something which actually adds value to the core product. So it is a feature of the product. So when you are actually buying a credit card and you get travel insurance with it, and it sort of becomes the feature of your core product. And that's what embedded is. Versus, in my opinion, and I think there could be other definitions, affinity is when you're actually going into the activity of cross-selling or upselling based on the contextual nature of the product, right? So if you're selling a phone and you're selling a warranty, for me that's more affinity, because there is affinity of that insurance product to the core business. But does it actually add value as is it actually a product feature? It's not a product feature, right? But if Apple is giving that as an embedded product, as Apple Care, that sort of becomes a product feature. So that for me is embedded again. So I think the same product could be used in embedded and affinity, but different consumer adoption patterns. So that defines whether it's embedded or affinity.
Interesting take on embedded and affinity, for sure. I think one more thing which we're definitely hearing the panelists, and what I'm realizing more and more, it's the collaboration is working both ways. So InsurTechs will benefit because of the advent of HealthTech and FinTech powering the entire ecosystem for insurance buyers, as well as the offtake of products on the HealthTech side, or the example which Sir gave on the Kanchipuram silk sari example, where the product is getting created because of the actual need, and the commerce is sort of enabling it. So collaboration will definitely work both sides. Here, I think I would want, Ashish, if you can speak a little bit more around how ONDC is looking at embedded insurance, and what do you see, how, probably when and how you want to power the platform with insurance?
So within ONDC, financial services has got three categories to start with. One is credit, second is insurance, third is mutual funds. And this is the initial rollout. Credit is specs are rolled out. So we are digital public good, right? It's a Section 8 company formed by the initiative of government, and we create protocols. We create the framework on which the settlement happens for commerce. Now, the credit specs were released, insurance specs for marine, health, and motor will get released next week. And that's where we have, it's what ONDC is about. ONDC is about giving more market to the sellers and more choices to the buyers. That's what it is about. So you have, at a very conceptual level, you have a buyer side aggregation and you have a seller side aggregation, which means all the seller side aggregation in this case could be sellers themselves, they can represent themselves, needs to be in insurance, needs to be a regulated entity. On the buyer side, also you need to be regulated considering the IRDA guidelines that you need to have a corporate agency or a broking license to do this transaction. But what it means is that having this, it gives you the opportunity, while we start with 3 products, to co-create because the rails are there. And we run cohorts. So we encourage industry people to come on board, attend the cohorts, suggest products. If there is enough market and enough demand, we will roll out the rails for those products. Because rolling out rails, so it is about collaborative co-creation. We don't create products. We create the rails required for you to create those products. And that cannot happen if there is no collaborative governance. And that's where the ONDC is focused about.
Great. I think we've had a good session so far. I would like the audience, if depending on Nilanjan, how much time do we have? Yeah, if people have questions, we're happy to take a few questions.
Hi, I'm Rishabh. So I have a question for panel. We talked a lot about the possibilities of possibilities about collaboration between health tech, insurtech, and fintech. But when we see as an industry, insurance and finance both are highly regulated industry. So do we see any threat around the different regulations or regulatory bodies governing both the industries, and then the challenges being faced during the collaboration between these industries?
You're probably best designed to answer this.
So regulation is there for a reason. And regulation evolves. So always there is a trioca of policy, technology, and regulation. Sometimes the technology, or more often than not, the technology precedes the regulation. Correct? And products cannot be created oblivious of the regulation. Which means the best approach to take is to go and have a discussion of a creative product with the regulator. And in my corporate experience, in my previous avatar, we have seen good, favorable direction being given on how to proceed further. Because some of the products necessarily did not have a consumer risk, but also could have a macro risk. So that lens of a macro risk is important to assess. So when we talk about FinTech and InsurTech, it is a larger industry discussion. And that's where there are frameworks on which you have to build your rails. So in short, answer is, it is encouraged by having an open, transparent conversation, and as an industry body to talk with the people who matter.
So I think I'll just jump on this once, because when we talk about doing innovative products, right? So I wholeheartedly agree with sir that at the end of the day, think of it in 2 ways, right? The regulator exists to protect your interests as a consumer, right? So that you don't get taken for a ride. That's the core purpose of the regulator being there. Now, when we talk about doing new products, because we are at Assurekit doing a few products where we've gone to the regulator and we filed the product, right? With the regulations already favoring new product creation, right? With file and use getting changed to use and file. Now, essentially, when you think of it from that perspective, it is pro-innovation, right? So fundamentally at Assurekit, we have a saying, because we think of a lot of wacky products, right? Like the kind of products that we think a lot of times we won't end up doing it, but the core philosophy that we work with is, especially for the Indian market, is where innovation goes, regulation will always follow. And RBI essentially has proven that to happen, right? And IRDA is following suit as well. So fundamentally, if you look at it from an inclusive lens, when you involve the right stakeholders, when you have a customer set that you can test on and customer testimonials and you're solving a real pain point, it does work out, right? The flip to that is at a lot of instances it can take time, but the question that at least we ask at the end of the day to ourselves is the time taken on building the product and taking it to market, will it yield good business results, right? And if the answer to that is true, we go behind the product. So yeah.
And I think I just want to add to what you were saying, not from a regulatory standpoint, but overall, where we are as an industry on embedded insurance, since we are talking that, and what are the challenges, right? So we were talking earlier, overall, if you talk about embedded insurance, it is still bite size. It needs to grow to, complicated products and all. But the ROI from these products, to who is selling, whether it's a distributor for insurance company, is still low, right? It's still a low ticket item, high frequency. The cost of that experimentation needs to go down. If you want to reach to the masses, if you want to reach the tier 2, tier 3 cities, the villages, and you want to actually, reach to that $7 trillion embedded industry mark that, every, consulting company is saying we will reach by 2030, we need to get the cost of experimentation down. So we at our level, what we do, we are trying to do that. We've got like 3,000 plus ready templates you can use, launch your products in a matter of 1 or 2 days. That sort of helps insurance companies, distributors to launch that at a very low cost. Otherwise, it's very hard to achieve that level of ROI that you want to achieve and to make embedded insurance market like, that $1 trillion market that we're talking about.
What I would like to add is, apart from looking at health tech, fintech to provide data, there is wide data available in public domain also, which is a remote sensing data. And what we have seen is, using remote sensing data, we could determine over the last 15 years to a area of 10 by 10 meters. What is the CO2 level, water level, forest level, crop level, across nightlight data, and there are proven papers of correlations. Now, can you combine these data to create new products to reduce risk? So this is where I would like to leave a thought, that not as a theme that we are talking, not only look at InsurTech with FinTech and HealthTech, but also look at other possible data sets and data set provider to combine that to create appropriate products.
Very well said.
I'll just add a couple of examples where actually FinTech and InsurTech are getting together. So for an example, in InsurTech, group definition is very clear. It is like whether does an entity has an insurable interest or not. So, and similarly, when it comes to FinTech, for an example, an entity which is not licensed, they can come as a co-branding partner, and roles of co-branding partners are very clear. Similarly, guidelines around TSPs, how technical service providers to banks and what compliances they need to follow, they are very clear. So like my understanding is that our current regulatory is very matured in laying down those boundaries as well in the current scenario. It's just about getting in touch with somebody and figuring out that how the use case is going to structure and fit together. And if there is something which is obstructing, then definitely, as sir has said, we can approach the regulatory and figure out things with in a transparent manner.
Definitely the things have opened up. I think the dialogue is fairly open these days with the regulator. You have the option to go and discuss products and discuss scenarios. So I think to your point, it should become easier and quicker for us to launch any such product that we guys discussed. Any other question, maybe last question, Nilanjan, if with your permission. Last question, or yeah? Yeah, one more question if anybody has any other question. No questions? Okay, thanks a lot then.
Thank you.
Thank you for this.